For the last 7 weeks, Bitcoin has been struggling to get over $32,000. However, this does not suggest that Bitcoin is about to collapse past new lows. We've got plenty of data to get through in today's video. So if you are a bear expecting some very significant downsides, stick with this video. Make sure you hit that subscribe button and like the content. Now, if you are a bull, do the same thing. But I know most of you guys are here already because we study the past to forecast the future. And if you want some of the receipts from the past that we've been studying for over years now, but most importantly, over these last 12 months of the cycle low through the stock markets and Bitcoin, you have got 1,000 videos on the channel to have a look at. But nonetheless, I'll continue to update you in these videos. So do make sure you are subscribed and like the content. We've been one of the few channels that have called the market as it has played out. Not trying to blow any or toot any horns here, but this is really, really important at this stage in the market. These are the times that you don't want to get it wrong because this is the bottom. And if you get it wrong at the bottom, you're left with very small profits at the top. And that's why 90% of people always lose money in the markets. All right, guys, top of the video description is the Bybit World Series of Trading. Join our squad over there, the top 1% of traders. That is the name of our trading squad. Click that link. I'll talk more about that later in the video. But if you want just a free trading guide and our free crypto and economic report, there is a link there, second in the video description. All right, guys, let's have a look at what's going on in the markets before I get across to BTC and some of these really significant historic patterns that are playing out time and time again and what it means for us in this stage of the market, in this Q3 of 2023, and basically how far forward can we look until we see some very significant breakouts in price. We're talking $40,000, $50,000. So I want to give you that in today's video. Now, just a quick one. We got some big news, but just to cover it, you know we focus on the charts. We are technicians by trade, but just understanding the news headlines, maybe this is something that will get the blood working on Bitcoin because it has been dead for about 7 weeks now, really, when you look at the price. PayPal launches US dollar stablecoin. Now, this came out just recently. You can see it's a couple of minutes ago on the news articles here. Bloomberg's also reported on it. And basically, they've got their stablecoin there called something like PYUSD. Maybe this gets some of the blood going in the crypto market. Maybe it doesn't. But nonetheless, you can see some of the major companies, some of the payment companies are working on their crypto holdings, as we might say, basically their crypto offerings. Now, I'm going to have a look at the stock market at the moment and get into BTC because we have some huge cycles at play here. You know, we look a lot at the real estate cycle here, and this is put together by my good friends over at PSE, so Akhil Patel. This has been going on for 200 years, and it's been a while since I've updated you guys on the real estate cycle. And the purpose of this for BTC is that we are looking like we're going into the peaks of a mega bull market for the stocks, for real estate, and that would mean Bitcoin would also follow suit. Bitcoin isn't an asset that everyone must need right now. I know that doesn't sound too sexy, but it really doesn't have any purpose yet. That's what we're all betting on, gambling on, trading on, investing on right now, is that it will have a purpose later. Once it has a purpose, you don't get the huge gains. Right now, we're all taking that risk that we're going to see some big gains. This stage in the cycle, the big macro 18 to 20 years cycle, is the last stage of the movement up before we get a collapse. I'm not a perma bull, I'm not a perma bear, I just follow the charts. I'm a pure technician in that sense, looking at the cycles and the charts. Now, piecing all of that together, where we currently sit, we're in this last stage of the movement up. Now, I've got a few bits of data to get through along with some of the, I guess, things, fundamentals that we are seeing going on in the market that moves us towards some of the big movements in the market. And we need to see this for BTC as well. And that's going to continue to spur us on in those gains. So essentially, we've got the technicals, the data there, but then we also want to see how is this going to happen? How is it going to happen in the psychology of the market? How is the market sentiment going to shift as well? Now, let's stick with the data to begin and then get into those the mind games, basically how things are shifting at the moment. You can see with the tops to the bear market bottoms, major S&P 500 declines. Basically, we're looking at this here, looking at just the data to show us how this market is continuing up in a bull market. So major declines on the S&P, losses of more than 19%, and they've chosen that number because when you get to 20%, then it's a bear market. So 1950 to date, so it's over 70 years now, you can see a lot of these have been relatively short-lived when you compare it to the current movement of the bear market low to where we've currently reached. Now, we haven't reached a new all-time high. That's why this data is still relevant. But once this reaches a new all-time high, this blue line will basically be scrapped or it'll be used to the cycle low, because that's what each of these gray lines are. Now, I'm bringing all of this together as this is what we do. We look at the past, we study the past to forecast the future. Now, if we continue to study what's going on in the past here with these bear markets, if this S&P correction that we're currently seeing, and I've called it a part of my wall of worry, that's what happens in bull markets. There's always some sort of worry as the market continues to climb. The most recent thing we've had is the credit rating downgrade of the US, going from a AAA to a AA plus. And so everyone's saying, well, this is going to freak the market out and we're going to crash. If that's to happen and we crash like tomorrow and break through this cycle low, that would put in a new cycle low. And it would then become probably the third or the fourth longest bear market that we've seen since 1950. So it's highly unlikely. This would probably take more time if it were to happen, possibly something like that going into 500 days. I would say if it were to happen, and I don't think it's going to happen, but if it did, it's going to take a lot longer, maybe somewhere to here, which would then set it at the second longest bull market in history, second only to, not in history, but since 1950, because we had the 1929 to 1932 crash, remember? The Great Depression there. It'll be second at this stage only to 2000, 2002. I don't think it's going to happen. I'm looking at the data here. More importantly, it has broken through key resistance levels after a huge accumulation and a second accumulation and multiple accumulations and reaccumulations. And we're only just starting this movement to the upside. And we need to have some healthy digestion of the correction of the S&P. So this is a slow time for Bitcoin as well as the S&P. That's summer, that's August here. I'm currently in Spain. Everyone's on holidays. No one is really that interested in markets. And it's probably going to be the same through to September as the holiday season wears on, and then we get into quarter 4 of the year. So what else do we have? Well, in the next 5 to 10 days, this is just one particular thought here, is that when we see how much weakness might you expect to see when August's first 3 days are down and the year-to-date return is greater than 15%. So we know that the year-to-date return for the S&P is greater than 15%, or has been greater than 15%. The first 3 days have been down. What typically happens? Well, potentially we bottom in the next few days and skyrocket out of here. I'm not saying we're going to skyrocket out of here. I think it's probably going to be a bit more of a slower grind, but we're looking for a low around August, maybe September. So this is that period where we look for one of those so significant lows. Nothing significant like March. March was the very significant low in 2023 that we've covered here and talked about on the channel. You can go back and see those videos and the tweets as well. That was a huge time to be buying up, that March 2023 low. Now, I'm just looking at a few other data points here. Historically, day 4 to the month end returns are 0.8. So maybe we do see a bottom in the coming days. And then towards the end of August, we actually turn positive again. Maybe not, maybe yes. It's basically a flat month if you look at 0.8%. This happens 78% win ratio. Basically 8 out of 10 times the month is flat, and you typically get a bottoming in that August period and basically come up. Now, it's probably not a significant bottom that you'll see in years to come, because some of these bottoms you just wouldn't look at ever again. And so maybe this is going to be around that bottom area, somewhere there, maybe somewhere here. And then we start to just grind our way out over September, then start to run again in October, November, which then leads on to BTC. So I've looked at 2 data points, or 2 major data pieces now. The potential of the the bear market here, very unlikely that we're going to see a new low there, especially with this correction. I bring that correction up because people are fearful of the US credit rating downgrade, which, you know, you can hear how bored I am of that in my voice, because it's yet another fearful narrative for the wall of worry as the market continues to climb. That is purely climbing there on the back of a lot of negativity, and we continue on. Something else, this is a huge piece of the cycle before we get to BTC. Savings income is rising faster than mortgage costs. We're seeing interest rates rise, but as interest rates rise, savings are also going up. Now, this is in the UK, okay? Granted, it's not in the US, and yes, some of the US savings are coming down, but at a very slow rate for now. That will increase as we get towards the end of the cycle, which then basically brings a lot more money into the market, which is a weak time. We're not there yet. It'll happen. Give it a couple more years. Savings are rising. This is the black line here. Interest earned on deposits relative to November 2021. Mortgage repayments. Mortgage repayments have gone up. Of course, that's facts. They've gone up because interest rates have gone up. But interest rates have also gone up on savings, and this is now outstripping the cost of mortgages. So we don't need to be so fearful at this stage yet. There is still plenty of money coming into the system, into the game, even as interest rates rise. Now, this is pure data from Bloomberg Analysis, Bank of England data, and I was put onto this by Akil. So he's following this, and we're looking at how these things are playing out across the world with the cycle. So looking at these particular cycles here. Now, this is where we're leading to. The peak here, 2025, 2026, we still have time, early stages of the Bitcoin bull market. Commodities boom, huge infrastructure spending. How the hell can that be possible? How can we spend money? You know, era of very easy money. People are freaking out because there is a lot of tightening. Yes, but there is a lot of easy money coming. The PayPal stuff, this is just the beginning. There's going to be things like this coming in. How might you say, is that going to be easy money? There's going to be easier ways to get credit. That's what an era of easy money means. And we're seeing that across mortgages now as the interest rates rise, so that everyday people can afford mortgages. Huge infrastructure spending. This goes across to the government. US government spending next 10 years on par with World War II levels. US government expenditure. This is where we are. We're starting to creep up again. We had a huge infrastructure boom, obviously, with COVID. So there's US government expenditure. Yes, money printing, and that also flows its way into the economy. We're now above the GFC again, and World War II right there. You can see we're on par with that, and we're creeping up. The trend is up again. Higher lows, higher highs. Money coming into the system, that is all part of the cycle. Then we lead into this final peak. This is the winner's curse. Note that this is going to be the time when everyone thinks the bull market is on and it's safe. It is not. That's the thing to really, really, really note here, and that's in the coming years. So I'm looking at timing of Bitcoin and how this history is repeating and what we can expect over 2023 and 2024 in terms of price range as well. So I want to look at some time targets and some price targets here to overcome key significant levels. So I know I'm called a perma bull quite often, but I don't give you these stupid, I'm going to say stupid, idiotic, ridiculous price targets of 150K in 2023. You guys might know who I'm talking about. Some other people have tagged people in here. So if you want to see who that is and get involved in your own drama, by all means, go to Twitter and have a look over there. That's what that's about. If you don't want the drama, forget it, waste of time. You just look at look at this chart, look at some of the data there. This is what I'm reading here. This is not a bull market, a perma bull, ridiculous target. This is just looking at history. And in history, what we've seen is Bitcoin underneath the 50% level. So this is the cycle top to the cycle bottom, divided in half. And this is on a log scale. That's why the half obviously looks higher than the bottom. Okay, should get that. Same deal back here. There's your 50% level. And again, right, and the same deal is what I'm looking at right now. The top to the bottom here. There's your cycle. There's your bottom. 50% is at 42,200. This has been a very big number that we are looking at for Bitcoin to overcome. Quarter three, it's taking a step to where we currently are now, so kind of a step back. Quarter three has shown in the past to have 2 red months in a row. Nothing out of the ordinary. If August is a red month, it's nothing out of the ordinary. But of course, that is going to bring fear. So it's basically preparing your mind, preparing your trading psychology in case we get a red month in August, in case we get a red month in September. It's happened before, and the price has not collapsed to new cycle lows. And if it wasn't for COVID, I would say that this price wouldn't have even collapsed to test for, probably not even test 5,000. Maybe it came back and tested 8,000 because the low here was $6,500, $7,000. So if it wasn't for a black swan event, which you can't predict, black swans, the term means you can't predict it. I know a lot of people saying, well, this could be a black swan event. That's stupid. It's not going to be a black swan event, okay? So let's just keep our heads with the data and in the game. Otherwise, we start to float off with the rest of these crazy bull calls or bear calls, right? So where we currently sit, even with 2 red months, the market tested the tops, the previous accumulation zone on those 2 red ones. These 3 red months, basically it was just having a pullback after such a crazy move. That's 300%. This move was only 200% there. And then you're 300% a lot further down. But this is crazy. So it had to have a pullback. That's just normal. But in our case, where we currently are, we haven't had any significant crazy runs to the upside. We've done it pretty methodically, testing up, testing down, testing up, testing down, testing up. And we're basically gone a little bit dead for this summer, which is what I've covered here for August. I've covered this with these particular data points as well. Meaning, even though it looks like it wants to pump here, I'm not saying it will, but it could just be the price flattens out for August. Now, we're going back to the tweet here. That's quarter three. Okay, so we get an idea of where we are there. Time frames, where are we going with this low to the breakout of the 50% level? Just before I get onto that, final reminder here for the World Series of Trading. It has begun, but it only began today. You can still get involved with this if you are one of the top traders. Then your prize pools are even bigger. You're not going to win 8 million, but you're going to share in a prize pool of 8 million. This is at the top of the video description here, so check that out, or in the pinned comment here as well. So go and check those links out if you want to be a part of the World Series of Trading. Like and subscribe as well. Okay, so where are we going? 22 months from the low is where the market broke out of the 50%. It tested it multiple times within the first 22 months after the cycle low, but it wasn't until the 22nd month did it break out and close above it on the monthly. The cycle 2015 into late 2016, okay, 22 months. It happened again. I would have been okay with 23 months or 21, but it was dead on 22 again. That was the month that it broke above and closed above the 50% level. So that was the 50% back then, $700. Back here was $11,455. Now our 50% is at $42,200. So 22 months after the cycle low, it finally closed above that level. You can see here it tested it once, came back, and then took another few months before it could break above. And then you can see the market really start to heat up from that point. Retail comes in towards the end, like we know. Most times they always come in really, really late. They give it a few months and think, oh, I should have got in. Okay, now's the time. And you can see the bars get a lot bigger in that final 12 to 13 months, as I've covered here. So you can see the note. When the retail bull market kicks off, there's really only about 12 to 13 months left of the bull market. Most retail investors won't buy crypto till the last few months either. Some probably even till the last few weeks. So this is the video that I'm talking about here. This is what I'm going into in the details when it comes to the quarter three. Maybe we see those 2 red months. What I'm thinking is going to happen is probably between now and that 22 month period. Where is that 22 months? It is in 2024 September. It's basically about 12 to 13 months from today. It is possible, and what's happened in the past is that the price has tested that top area there. Price has tested the 50% level before breaking out. It doesn't just sort of get there and then break out. We could be different this time, right? But it's still going to be the same in the sense that probably around that period that we get the breakout. Maybe it's 18 months. Maybe it's 24 months that we break out of the 50%, but we're just looking for that sort of rough area. But what we have seen is definitely a test before that time. So keep an eye out for that 40 something area, and then maybe a bit of a fade from that point, depending on when we test it. And looking at cycles, maybe we test it somewhere Q4 or Q1 of 2024. We have a fade out again for those 6 or so months until we reach approximately that September period. So approximately Q3 or Q4 of 2024. And that's when we start to go on some big moves. That all coincides with the S&P and what we have looked at with these Bitcoin bear markets, Bitcoin bull markets, and Bitcoin accumulations, where the S&P typically reaches a new all-time high first, and then it can take several months before the Bitcoin bull market begins and the S&P goes into another new all-time high as well. So wrapping that up there's your 50%, probably going to test that within the next 12 months and probably going to break it roughly that sort of 8 to 14-ish or so months. Basically looking at sometime mid next year to late next year to break past 42K for good and not come back under that 42K for this cycle. So that's a huge look at price target, time targets, price tests. Keep a lookout for that. What we could expect over Q3, what we can expect over Q4 of 2023. I've basically given you a bit of a roadmap for now until late next year. So we've got a lot to follow up on the channel. Don't go anywhere. Hit the like and subscribe. You know where the links are in the top of the video description for your free trading guides and economic and crypto reports. I'll see you guys back here at the next video. Don't go anywhere. There's a lot going on. Catch you at the next video. Until then, peace out.